Good morning, traders. Paul here with GammaEdge. Today is Monday, the 28th of November. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. So our summary for today, the market models are new long, effectively. We're in day 3 of the short term. We're ending the period where the short term typically shows some weakness and may pull back. The intermediate term is also in day 3. It is extended. You'll see that on the next slide. The long term is in day 2. The ribbon inversion is nearly complete, and what that means is that we are progressing towards a confirmed new long here, and that is constructive for the bulls. Note, we've been choppy, we've been horizontal, and you'll see that on the next slide. And what that typically means is that the trends are back and forth, and there is no real trend. So this could be simply noise. If you're a trend follower, this is part of what you subscribe to in being a trend follower. Some other things that indicate storm clouds on the horizon: the Russell 2000 small caps and the S&P 500 are not participating in this bounce. We feel that is significant. The NAS, on the other hand, is, but it's still got a ways to go. The long term is still transitioning to long, but it's going to take some time. So we could be prone to failure here. We're not getting broad participation in the markets, and that is something to be aware of. Plus GEX, which is the upper goalpost, still remains at 4,100 pretty decisively. It's not moved. It's been there for a while. Minus GEX remains at 3,600. It too has not moved and has been there for quite some time. We did close in a call-dominated area on Friday, and the SPX combo, which is the AM and the PM settled instruments. The transition area has become very much a wider transition, and when that occurs, we start to look to see which direction did it go, and in this case it went to a lower floor. Now what that means is that we could drop and still be in this kind of low pressure area for the dealers, so we want to be cognizant of that. We are looking for areas where delta approaches 0, where we have a sign change, coincident with where we have a gamma level that's flipping to 0 too, again with a sign change. Those are typical parking spots, and we look for those as overnight hiding places, pinning areas. You can watch for these in the Discord using the $E command within the SPX complex. I only recommend you use the SPXP because we don't have an AM in the short term. So this is just the PM settled, and it'll actually return a little bit faster if it's not processing the AMs. Today's 0DTE has a good amount that's coming off at 40, 50, 60, and 100. Just be aware that these are currently out of the money, and people may take whatever extrinsic value remains today and take those off the table. If they do that, that'll put some downside pressure on the markets. We are mindful of the end of month expiry on the 30th. We're seeing a large amount at 3,700, 3,750, 75, and 3,850 that are in play, and they are scheduled to vaporize. And with those deltas, especially down here at the 37, 3750 area, pushing the +1 area, we think any downward pressure could trigger an early monetization. So just be aware of what's happening and what's going to happen this week. The market model, as I said, day 1, 2, 3 of the short term. This is the bolded cumulative tick, and you can see very strong performance over the last couple days. So if you're a short-term trader, this gives you a very, very good indication of what's happening. The intermediate term is crossed above what we call the ribbon. The ribbon is very narrow. It's horizontal, which means we've been back and forth across this, so there is no trend. Right? Be aware of that. There is no long-term trend. And when you don't have a long-term trend, you're going to get chopped. So your time frame has to naturally go to the shorter time periods. So if you're watching this particular signal, or if you're watching the long-term trend, you're probably not very happy, and we understand that. Key levels for today, really nothing has changed. We do note the expected move is actually not very big, 1.6%. This is fairly conservative. We can look at, here's the upper goalpost, the lower goalpost, and then the illiquid COI and POI levels of the combo complex. Over here on the PM complex, I just want to call out this 38.35. This is the December 30th that will roll off from the JPM 44,500 contracts. This is rearing its head. It's been here for a while. This probably sets a downside target. Just be aware as we march towards that, there's going to be some increasing interest in that. Taking a look at the PM settled complex, this is literally the SPXP within the Discord. Pretty interesting to note that again we've got a structure that's fairly supportive across the board, but just be aware of the potential for pushing downward and look at the key levels. Taking a look at the delta moneyness, we're seeing effectively this 3750 line that's coming up in 3 days, now 2 days, now that we've opened or getting ready to open today. That's a big deal. This link should work for you if you have the PDFs in the Discord, and this will take you to a discussion that I had with our members concerning the use of the moneyness structure, how to interpret what we're looking for, and basically this is showing some volatility potential in the SPX PM settled complex. The 0 DTEs, pretty important here. Again, we've got a lot of hiding areas that are potentially here. You can see that fairly weak delta structures in the 0 DTEs, so these could flip. Any addition of puts in this area could flip these small delta numbers back over to a red side. That'll set up the conditions for actually flipping and hiding, and so just be aware that where we have gamma transitions coincident with the potential of having delta transitions could set up those areas for overnight parking and low exposure for the dealers. The 1DT is even wider, it's messier. We're looking at this in context of we don't think we're going any lower than the 3950 for a number of reasons, but the key takeaway at 4060 is now a dominant line coming off tomorrow. This is a little bit misleading because the amount that is expiring tomorrow is so small. This is auto-scaled, and in context of like the 0 DTE, you would think their magnitudes are relatively the same, but you can see it's a 3 or almost 4 to 1 ratio here between the 0 DTE and the 1 DTE. So this is a much smaller impact on tomorrow. I will note though that we are starting to see a lot of the calls come out of the complex, and we need those to get restored. If we don't see calls going into the complex, we're going to see more red, and that's going to be meaningful because that means over in the overall structure, the PM structure here, when we see red starting to appear, it's like sand beneath our toes, and the downside becomes more likely. Taking a look here at the combo complex, which is the AM and the PM settled, we do not add the SPY or anything else in here. This is just purely SPX, AM, and PMs. Very strong structure. As I said, this is the JPM sitting up here for January, sitting up at 4145. The key takeaway here, very loose transition structure here. This is the 4000 strike with COI, call open interest, put open interest, fairly balanced. You can see that across the board here. But you can also see a lot of areas potentially for parking, and then when you look at the magnitudes of the deltas, you can actually see some fairly small numbers in here. Any removal of calls, like I said, will make these numbers go less positive, and any addition of puts could potentially drive these numbers in a negative, which is that sand eroding beneath our toes. Finally, taking a look at the SPX structure, no real changes here. 4100, 3600, excuse me, down here. Structure remains intact. Structure remains intact. This is what we've been looking at all last week. We did close right in this area on Friday. We're poised with the futures to open up in this particular area. As long as we stay at the top of transition, we should be okay, but if we start slipping down, there isn't a lot to hold us up in this area, so we do definitely want to stay up in this area with the 3930 being kind of the low line in the sand. I think, as long as we stay in this upper area, we can continue to potentially advance, but again, storm clouds on the horizon. Remember what I said about a couple of those lower lines coming off. Here's the 36, 37, 3750, 38, and 3850, and you can see there is some gamma that's definitely in those areas that could play a role here. So with that, I'll leave you. Let's have a good week. Hope to see everybody in the Discord. Come and join us at GammaEdge.us. Click on the pricing tab and fill out the blanks, and that'll get you in. 14-day free trial, everything turned on. Follow us on Twitter, GammaEdges with an S, and then here on YouTube. If you like today's content, let me know immediately by smashing that like button. That gives me an immediate indication I'm on the right track and providing you guys what you want to see. And then, of course, follow us, because Taylor and I post daily. We try to put 2 videos out, morning and night, just so you can kind of see what we're seeing and help this thing called Gamma and Delta influence in a positive way your trading journey. So with that, have a good week. Take care.